So we're back with another action-packed session. Today we have a ton to cover with you guys. We have 4 predictions for the US housing market as we get into 2025 and beyond. We're going to cover 2025 housing market outlook and forecast for you guys. Then we're going to give you 7 home styles. So 7 types of homes that are projected to soar in value by the end of 2025 and give you a bit of a interest rate market update as well. So we have a ton of information to cover with you guys. Make sure you like, comment, subscribe if you're new to the channel. Leave a comment that says I subscribed, and go ahead and DM me cash flow if you're on IG and you just want to tap in and learn more about this game. This game is fast paced, fast moving. There's a lot going on and a lot for you guys to get into. Let's get into the mindset quickly, and we will keep flowing through this training. Let me jump right into the mindset aspect. If you guys have any questions, drop them in the chat section. If you want to get access to any of these articles that we're going over, just click the link in the description and you can tap into that and I will send that out. Mindset. You have to adopt a problem solver mentality. Your mindset as a real estate investor is I solve problems for a living. You have to be able to turn some of these setbacks into opportunities. A setback might be, I'm starting off, I don't have a lot of cash. I don't have a lot of cash saved. I don't have a lot of cash in the bank. I don't feel as prepared. That's a setback that presents a opportunity for you to learn more about creative financing, how to work around those issues. The same thing with credit. If you have credit issues, that's just an opportunity for you to learn how to navigate this game without credit. That's what you're trying to learn at that point in time. It is not a permanent hurdle or a permanent roadblock. A lot of people look at this stuff and they think if they can't get past the immediate issue or they can't see past it, they're just like done. They're knocked out of the game. You're never out of this game. You have to stick with it in order to get results. So you want to have that problem solver mentality. As you get deeper into this game, a lot of you want to get 20, 30 properties, 100 properties. There are lots of problems that are going to pop up all the time. There are going to be tenants. There's going to be maintenance professionals. There's going to be contractors. There's going to be lenders. There's going to be architects. There's going to be all these different people, insurance agents that you're interfacing with. And in order to get ahead of the game, you have to be able to solve problems. You even have to be able to think for some of your people. Some of the contractors, you might have to think for them, solve the problem for them. Solving their problem is solving your problem. So there's a lot of work that you have to do in this game as a new real estate investor, and your mindset is everything. A lot of us come into the game, we don't have the right mindset. We don't have the right system set up, and we therefore will fail. Not because we don't have the capital or credit. You could have cash and credit and fail in this game if you don't have the proper mindset. If you don't know what mindset you need to have, coaching can help that. But you really need to get out there and kind of test your mettle a little bit, get into a couple of deals, learn the ropes. If you want to fast track, always get coaching. If you want to learn from somebody else's mistakes, always get coaching. It's the cheapest way. Learning from your own mistakes, very expensive. But always have that problem solver mentality. You will be more successful in this game. If you have the, oh my God, there's a problem, and you kind of freeze up, that's not going to work out very well for you. So just make sure you guys stay locked in there. Yeah, there we go. We're good to go. Let's get into this thing for you guys. If you have questions, drop them in the chat section, drop them in the comment section, and we will just keep flowing through this thing. It may take us a little bit of time to get through this, but not too much time, I'm sure. So the 4 predictions for the US housing market. Let's kind of go through these one by one. I don't always agree with this stuff. You guys know that. If you disagree, you can drop a comment saying why, and we'll answer your questions as we flow through this thing. But yeah, I don't always agree with some of these predictions. Let's just go through. But some of them are 100% legitimate. Prediction 1: rising home sales. Olson says, and this is I'm sure an important analyst on the real estate game. Olson said the housing market was slowly becoming unstuck, a trend that should continue as home prices rise at a modest pace. The firm predicts that home prices will rise by 2.6% in 2025, while existing home sales will notch 4.3 million, up from 4 million sales. So what it's showing you is that prices are going to continue to go up, which is good if you're in the game. If you're sitting on the sidelines, you're like, oh no, I want prices to go down because I'm trying to find some buying opportunity. The reality is you're not going to find it. Like I hate to be the one to tell you, but the time is now. The longer you wait in this game, you're just waiting for prices to go higher and higher. You're just waiting for prices to keep going up. And for a variety of reasons, some of which we're going to talk about tonight. But you're not necessarily going to get price relief. You may get it in a local market. Like if you go into Florida right now, and because of higher insurance premiums and higher property taxes, higher everything, higher HOA fees, people are just fleeing like the area. So the property values are going down. But think about it, is that really a savings? What do you care about as an investor? Specifically an investor. Like there are different things that you care about as a you know, even a mom and pop buyer, somebody who's just going to live in a house. But what do you care about as an investor? I just care about two things: how much money's going out every month, how much money's coming in every month, and I want the second number to be bigger, right? So even if the price is lower in Florida, if the monthly payment is higher because of the HOA fees, because of the insurance premiums, because of the taxes, does it matter? Do you really care if more money per month is coming out of your pocket? So even in some of these markets, when you see adjustments in pricing, oh, well, prices are down here. Why are they down? Are they down because it's bad to buy here? Because other factors within your monthly, what they call your monthly nut, which is the amount of money that's coming out every month, is your monthly nut growing on the property? Is that more expensive? That to me is a little bit more important than oh, the prices came down 10%. I don't care. Did my monthly payment come down 10%? That's what I need to know to be in a good position. So you kind of have that. You're gonna have choppy mortgage rates, which we're already seeing. I'll touch on mortgages very quickly. Mortgage rates have dropped significantly over the last week, maybe over the last couple of weeks, but they've dropped significantly, and it saves you money. Is it game changing money? I mean, you tell me. So new purchase mortgage rates sank as much as 39 basis points this past week, lowering monthly payments on new loans. The 30-year fixed rate average dropped 23 basis points to 6.68%. 15-year loans saw their average rate fall a quarter percentage point to 5.84%. Jumbo 30-year rates gave up 18 basis points, lowering to 6.72%. And that's something that we want to look into, the jumbo 30-year. So 6.72. On a loan of 200,000 to 600,000, this week's rate drops just this week mean you could save $31 to $92 per month on a 30-year loan. That's not bad. So, that's an extra $100 a month in your pocket just this week. So, rates, I think they're going to be choppy, meaning up and down. They're not going to go straight up, straight down. They're going to kind of chop as these Trump tariffs come into play and start to, the market reacts to them. So, you're going to see rates kind of reacting to tariffs and inflationary pressure. That's going to happen probably until June-ish, I say, when we kind of balance out, maybe in like June. And then you'll see things start to stabilize and probably just continuously go lower with pressure being put on the Fed to reduce rates. So that'll be interesting, but it'll save you money. So I'm expecting rates to be more volatile. So I'm expecting volatility, more extreme price movements in rates than normal could be seen over a quarter to quarter basis. So I think you're going to see some big movements. We may end 2025 in like the 5.75 range. We really don't know, but if that happens, I mean, you're going to save a ton. That will really unlock the market and unlock cash flow in a major way that you don't want to miss. As a new real estate investor, like, you don't want to miss. As an existing real estate investor, you don't want to miss. It doesn't matter. Even if you've done 100 deals, you don't want to miss this opportunity, because this is a unique market we're looking at in terms of cash flow, with where prices are, where rents are, more importantly. like I said, it's not the price of the property that realistically matters. It's the monthly figures of what's coming in and going out. So if rents keep going up, which they've inflated. Even if prices are higher and payments are higher, if the rents outpaced that or kept pace with rates, which they did in many markets, the spread is still good. Meaning, let me say that in a simpler way. If I had a mortgage payment 10 years ago of $1,000 a month and the rent was 2,000, I would be, putting getting in $2,000 a month, putting out $1,000 a month. That's $1,000 spread. If I can buy a property today and my payment is 2,000 a month, but the rent inflated to 3,000 a month, then I'm still buying it and still getting $1,000 spread. That's all I cared about anyway. At the end of the day, was the spread, not necessarily the price of the home. So when I'm looking to invest in certain cities, I'm looking for spreads. What's the spread between the monthly payment, the monthly nut, what's going out of the property, and then the rent, what is coming in? What is that spread? Where are the spreads the best? And then where is the inventory priced well enough where I'm not taking on too much risk? A $2,000 mortgage to make $1,000 a month profit, that's still a good bet, right? Because even if it goes to hell, I got 2 grand a month going out, but when it's good, I'm up a G a month. So I like that too. Like that's a 50% kind of spread. Like I'm risking 2,000 to get 1,000, but it's pretty consistent and the government's paying it. I like that bet if I'm doing like Section 8. Now, I don't want to be paying 4,000 to get 5,000 back. So I don't want that. Now that's a 4-to-1 spread, right? Because I'm betting if the tenant doesn't pay, I'm on the hook for the 4,000. But if they do pay and everything's good, I get 5,000. It's still $1,000 spread, but that's a lot on like a single family. Maybe on a multi that makes more sense. Ben, your agent. Hey, how we doing? I see you on the IG. Feel free to drop a question, guys. If you have questions, commentary as we're going through this, definitely do it. But that's what I'm thinking about is spread. Where can I get a good spread? How much risk are you taking? That's why some of these cheaper properties, like we do through the Boots on the Ground program, where we find, finance, rehab, tenant, and manage the properties for you guys. We're we're looking in good cities where the monthly payment is still very low because we can buy the properties low. A lot of these properties we can buy for under 100K. So that's kind of the way to do it. Let's keep flowing through here. We should have some more goodies. 30-year mortgages are way down. So that's not bad. Let's get into another prediction. A buyer's market in the Southwest. Zillow's data indicates most buyer's markets in the US are in the Southeast. I would disagree. I think well, it depends on what you would consider a buyer's market. Zillow thinks a buyer's market's where people want to like move and kind of live. Um, I think it's where you can rent properties and make cash flow, right? This is the 24/7 cash flow university. And for cash flow, the Northeast is king, not the Southwest, not the Southeast. So it depends on what you're talking about. Southwest, but it said buyers could find more opportunities in the Southwest next year as more inventory in the region becomes unstuck and attracts home buyers. I believe that. I believe inventory will become unstuck because rates are going to continue to fluctuate. They're going to go down in a, I think, dramatic way. I think in a way that people haven't seen before. What goes up must come down. What goes up fast usually comes down fast. So the meteoric rise leads to the like fallen star, the meteor, the comet striking, the earth kind of syndrome where it's coming down pretty quick. So I think rates are going to fall fast. They're going to fall a point. You're just going to wake up one day and there's going to be a 5 in front of that interest rate. I just got hit up by a lender on Instagram, on Insta for my Insta people. Everybody's DMing me on Insta to tap into those free trainings. If you want those free trainings, just DM me cash flow. But I ran into this guy and he's like, yeah, we do cash out refinances, 80%, no seasoning requirements, like no seasoning. So he's going to send some information. But I'm going to vet that and then hand it off to my people. But the lenders are also going to loosen a bit on their regulations, and that's coming from the top down. These buyer markets should have the greatest number of movers, while sellers will feel the heat of competition as buyers will have more homes to choose from. Buyer's market is good for us investors. If you're an investor, you're watching this and you want to get out of the 9 to 5, like you should be watching this if you're tuned into this for just one reason, maybe two. One, you want to get out of the 9 to 5, or two, I just don't want to be dependent on the 9 to 5 and I want to leave legacy. Leave legacy should always be a part of it, in my opinion. You need some motivation outside of self. So just to leave assets, to not start your kids at zero, which is what a lot of people do. You can look back generation to generation, and it's like grandma started off at zero. She didn't have nothing. Then you look at your parents, and it's like, damn, they kind of started at zero. Doesn't mean like they didn't get educated or anything like that, or they didn't have opportunities. It just means financially, in terms of inheritance, in terms of wealth, in terms of assets, they started at zero. So now you have two generations that started at zero. Then you look at yourself and you're like, damn, did I start at zero? Did I inherit any assets? So now you started at zero. Are you going to create another generation that starts at zero? Good question for yourself. Are you going to leave the next generation with a zero? Is there going to, do you see a value in maybe people starting off not at zero? Some people don't. Some people have that mentality like it makes you tough to start at zero. Like you start at zero, you're tough. You got, this out of it. They don't necessarily see a value in starting their next generation ahead a little bit or with assets or a different mindset. So therefore they just don't plan for it, don't do it. The money comes in, everybody's like, and not everybody's broke. There are lots of people out here who are highly successful, doing many things, making great money and very comfortable. But a lot of people who are even consider themselves broke, they touch a lot of money. They might touch, $50 to $100,000 a year, which is enough money if leveraged correctly through real estate to at least start to build your way out of it. The best thing about starting off in real estate broke is you have a very low number to hit. So if somebody comes to me and says, and I'll get back into this, if somebody comes to me and says, hey, I'm starting off, I'm making like 40K. I'm making 35, 40K. I say fucking fantastic. If we got you 5 properties, that would bring in net more than you earn right now. So if you're already going to work 40 hours a week at that clip, you can get out in 2 years. Whereas somebody who is making $250,000 or 500,000, it's not that they couldn't get out in a similar amount of time. They could still get out, but they have to go a little bit bigger so they can feel it. Because to cover 50,000 a year, that's not going to cover all their expenses or however they're living, whatever lifestyle they've accumulated with that income bracket. But with the lower income bracket, you're actually in a better position to win. That's the shocking part. It's just that your mentality is in a worse position because you're too close to the edge every month, and it does change the way you think. It does change the way you think. It does change your decision making. It does change your long-term outlook, which is why you have to feed your mind other things and not necessarily focus on where you're at, but more on where you want to be. So you can stay in the right mindset of where you want to be, not where you're at. But where you're at is actually pretty good if you would start thinking about where you want to be. If you would just think about where you want to be, you'd be fucking fine because you only need to cover 25, 30K a year in cash flow. That's 3 grand a month. You can do that in 3 properties. You could do that definitely in 4 properties, especially if you're patient. Even if you're starting off with like 20 G's, you could do it. So you have a lower threshold of comfort and then you can climb from there. So I think that it's just an interesting mindset to be in. But these mindsets can trap you. the closer you get to the edge, you start thinking and making different decisions because you're no longer dreaming. You got to almost stay in dream mode so that you can be future facing, where you can see, oh, I can just build, like you would just say, oh, I could just build myself out of this in 2 to 3 years. I don't give a fuck about it. Let me just keep working, making this money. Let me figure out how to tighten my belt and save more money or get more income coming in on the side, but not to change lifestyle. More income coming in on the side so I can acquire more money to get more assets to get out. 100% focus. And then you wouldn't even care about the status quo because the status quo, wherever you're at, would just be changing. It wouldn't be so fixed. Some people get in the mentality of where they're at and it feels fixed to them. Like they can't get past it. Like, oh, money's just tight. And it's like, when's money not going to be tight? It'll get better when your focus changes. It's almost like if your money's tight, you're waiting for your situation to change. Your situation will change when you change. When you get a different vision, not even a bigger vision, just a different vision, different focus, and start moving towards it. But that takes future focus over present focus. And you got to do that mental work. This game is 100% mental. The only thing that could accelerate you very quickly in the real estate is something like the boots on the ground program. Because the boots on the ground program it doesn't matter. It doesn't matter where you're at with all of these things. If you get into the program, we're going to pull you through the process of getting a deal. We're going to pull you through. We're going to find you a deal. We're going to make these things happen. Get you some cash flow coming in. And I've seen this happen with guys who they came in the boots on the ground, got a deal. They almost didn't believe it. They almost came in the boots on the ground, like still skeptical. And then they got a deal and the cash flow started coming in. They log into the bank account and they're like, holy, what is this? And it's like, yeah, you're cash flowing, bro. Welcome to the party. And they're like, damn, this thing is real. Then the mindset changes because today seeing is believing, which means people don't believe anything until they see it. Once you see it, you don't have to believe it because you see it. It's right there. Boots on the ground just makes it right there. You don't have to believe. If you're doing this on your own, then you have to believe. If you're watching this and you're like, I'm not getting in no course, I'm not investing in my knowledge. All this shit is free on the internet. I can find it, I can do it myself. I'm with you, dog. I'm right there with you, dog. Although I will just get in the mentorship program. Like I will. And I do every year. I do. I have a track record. I'll get into courses and test things out all the time. But you got to believe. If you're going to go alone and it's just all on you, then you better believe in the mission or you're going to get knocked off balance as soon as something gets hard, as soon as something happens, as soon as you run into a roadblock, as soon as those things happen. It takes you right back. It takes you right back to the mindset. It takes you right back. Do you have these positive mindsets? Do you have these traits? Everybody who's in the mentorship program knows the 100 Keys Masterclass starts off with mindset. It's not just like, hey, we put a mindset video in the 100 Keys Masterclass. It's a whole course. It's a whole mindset course. Then we get into the real estate. Why? Because if you don't have the mindset, you're done. This is why I can get on YouTube for years and drop hella information and create virtually no competition. Because a lot of our mindsets are so warped, you can't really just listen and run with it. You would need coaching, which real estate coaching, one interesting aspect of real estate coaching is it's not just real estate education. It's a lot of what I would call it's a lot of mindset therapy. It is a lot of mindset therapy. I call it real estate therapy because there are aspects to real estate that scare you. And somebody has to take you and face that fear. or you'll never get over it. People know that. They're like, oh, what's the best way to get over your fears? You got to face them. But people are scared as shit of real estate and they don't face it. They don't face it. They would rather, instead of facing the beast, they would rather take money and just give it to, like, let me just give 50K to a contractor. He said he can handle it. I just don't want to touch it. And then the guy runs off with the money. That's how scared people are. They're so afraid of it that they'll take their hard earned and just give it to somebody else to deal with it. Some people are so scared of it, they don't even want real estate coaching because they know they would have to face it. They're like afraid to really make that decision. Hey, I'm going in. They haven't been beaten up by the 9 to 5 enough to say, you know what? Even if I fail at this, it's better than just staying stuck here. At least I went for the shit. A lot of people are just, they're held back by mental things. Once you help them to get over their obstacle with success, nothing gets you over your fear more than success. Nothing will get you over your fear of a deal more like just coming in the boots on the ground and just smacking a deal, or maybe coming in and smacking 3 deals at once under rehab in the boots on the ground program. Just like, yo, I'm building 3 bird strategy deals right now on autopilot. And then getting to the end of those projects, nothing will help you to get past it more than just doing it. But if you do it alone, you have to have mindset. You have to have mindset. And then the smarter you get, the more you won't want to do it alone because you can only go so far. You'll start seeking out leverage and acceleration. I want speed. I want to get there faster because life's short, time's short. The smarter you get, the more aware of that you are. So you're just like, yeah, I just want to go faster, man. That's the purpose of mentorship. It's not that you can't do it, but why take 10 years to do what you could do in a year or two? Why are you signing up for a 10-year stint? For what? To prove to yourself what? That you can take 10 years to do something that takes a year and a half? You're sure as hell not going to prove that to anybody who knows what they're doing, right? To anybody who can help you to go faster. You're not going to prove anything to them. You only could prove to yourself that you could take 10 years to do what takes a year and a half, or could have taken you a year and a half with a different approach. With an approach that says, well, an early investment cost in knowledge, infrastructure, leverage, whatever it is. It's not all about mentorship. It could be leverage. It could be hiring a virtual assistant. It's just all the same rope of investing in self that, a investment here could actually yield greater profit in the future. That's really what it is. An investment here could yield a greater profit in the future because I believe in the future mission. So I'm comfortable making this investment because I know me and I know my skill sets and my capability. And if somebody puts me in a position, I'm going to be able to run with that ball. If somebody calls sweep right and puts a football on my chest, I'm going to break through that line. Like, you have to have some type of attitude about it, some type of mentality. But that's that. You got to have your mind right. If you don't have your mind right, you're cooked anyway. It doesn't matter what I teach you, what you learn, whose channel you tap into. If you don't have your mind right, you're done. And that's all I can tell any. That's the best advice I can give anyone. You got to be tough. You have to start with mindset. You have to stay locked in. It's not for the squeamish, but it does work, and it is relatively conservative the more you learn about it. At first, it's very scary. The more you learn, the less scary it becomes. It becomes very interesting as a asset class, especially if you do good rehabs, like solid rehabs. Put in, go put 80K into a place. Don't. There's some guys out there who tell you, oh, you run into this place, you put in, 15K, paint the walls, just slap a body in there and just don't put any money. There's mentalities out there. These mentalities will yield different things. I'm more of a middle path. Don't go too slow. Don't go too fast. Just try to take more of a middle path. Take your time. Trust the process. Have fun with it. Enjoy the process. Look up and have 10 houses. Look up and have 20 houses, but enjoy the process of it. By the time you hit your goal, you'll have another goal. You won't even care. Um, Smaller homes. This is interesting. Zillow predicted that small homes would continue to rise in popularity. The firm said the word cozy appeared in 35% more Zillow listings this year than last year, a sign that buyers could be more interested in downsizing to smaller and more affordable abodes. Okay. Home values of small condos are finally stabilizing after remote work left downtowns more empty, even while home value appreciation of larger properties, though much stronger, continues to soften. All right. So that's good there. Let's talk about some of the things in this housing market. Guys, if we have any questions, comments, drop them in the chat section. Drop them in the comment section. We'll keep flowing. Like, comment, subscribe if you're getting value. Share the content with somebody else you want to get value. Stay locked into your mindset. Real estate therapy. I should open a practice. You need somebody to talk to. You run into a bad tenant, they take you through it. I have a very funny story. I'm not even going to tell the whole thing, but I have a very funny story about my brother and a tenant he was dealing with, and he needed real estate therapy. Talked him through it, and I told him at the end, this is how it's going to unfold, and it's going to unfold so well. I'm telling him about this eviction. I'm not going to get fully into the story, but I'm telling him, and he's like, the tenant won't get out, and this, that, and the third. He's so frustrated with this tenant, and I'm just like, bro, at the end, the eviction is going to happen. You're going to have so much fun during the eviction. You're going to feel so vindicated. It's going to completely erase the time. It's like basically kind of like it's worth the wait. Like I know you're hungry, but what's cooking up, it's worth the wait. You're going to like it. So he calls me at the like eviction, and he's just like he felt amazing. He felt so vindicated. I know the feeling because I've been through it. So I know the feeling. That's kind of part of it. That's kind of part of it. But that was a funny one. You will feel vindicated as you get better at this game. And a lot of the things you do, a lot of the value it's in the future. Getting started. Government policies. Let's tap into this one. Federal policies, including land development on federal land, tariffs, and regulatory changes, will shape the housing market in 2025. Federal land development could help alleviate the housing shortage. Conversely, new tariffs may increase construction costs. This could be mitigated, however, as loosened regulation for government contracts and purchasing following the natural disasters could at least temporarily lower costs and accelerate rebuilding for the creation of new affordable housing. You're going to just keep seeing that word kind of everywhere. Affordable housing. Affordable housing. What do we focus on? Affordable housing. Pretty much all of our strategies are affordable housing strategies or flipping and really it's still affordable markets. The whole thing's affordable, right? Because if you're doing affordable housing in Philly, then you're doing affordable housing in an affordable city. And the whole market is affordable. Even the new homes, the home you could buy for 500,000, if you went into California with a 500,000, you get a roach box. So the market is affordable. Then you're doing affordable housing in an affordable market. But the government keeps talking about it. Everybody knows that's where the money is. The entire government is kind of like they will follow the money. They're going to issue things. They're going to loosen regulations. They're going to make it easier to do these things. So you want to be in affordable housing. The tariffs are definitely going to increase construction costs. I think that's going to hurt you if you're like a pure ground up person. If all you do is ground up, this will hit the commercial space as well. People ask me, Brian, why do you do residential, not commercial? Because commercial, I can go fast. I can go real fast. Not every deal goes that fast. Some deals go slow. Deals are like people. Some move fast, some move slow. Deals are like anything else in the world. They come in multiple variations. But in general, a residential deal moves fast compared to a commercial deal. A residential deal is like a rabbit. A commercial deal is an elephant. Now, an elephant could probably run your ass down. They can run faster than a human, but they're not going to run faster than a rabbit. You know, they don't move that fast. They can move fast for an elephant. Hey, move really fast for a commercial deal, but they don't move faster than residential. You can go quickly. You can also save materials on the residential side because especially if I'm doing gut renovations and existing structures, which I do, because of this, because of this stuff, because we're dealing with this stuff, this is all part of my thought process. Why do you deal with existing structures instead of the? That's why. Because policies can impact prices. Now, if I had a little bit of a framing job because it's an existing structure, maybe my cost went up $700. Oh man, my spreadsheet doesn't look as good. My cash on cash return went down 3%. What a bummer, right? But in the reality of it, it's still a good deal long term and what it's going to do holistically. Now, if I'm doing a ground up deal, my cost just increased, $15,000. I gotta, I got some explaining to do. I got some explaining to do. The lender doesn't want to. The hard money lender doesn't want to give me more money. They don't care. This is going to happen to people. This is going to happen. So you also want to be in deals where you can shift mindset. Yeah, this is I see Vino Mortgage said you explained this to me. I think this is like a real estate ride along tour spiel. But definitely this is yeah, the inherent value. Definitely. I won't go into my inherent value spiel here, but it is part of inherent value. It is part of it. Inherent value to me is the most valuable one of the most valuable thoughts in investing is what is the inherent value of the asset? Does that exist? Can it be determined? And then is the current market price above or below the inherent value? Because inherent values tend to return. They tend to come back to par. So if you can find that spread in real estate, you will tend to return to par or even accelerate beyond that and make money over the course of time. Very interesting stuff. But this is what I obsess over and stay up overnight up all night until 2, 3 in the morning obsessing over. But then I just don't do it. I just do existing structures. And I section 8 them because if the market goes to hell, the stimulus packages start parachuting out of helicopters and they reinforce these programs, these affordable housing programs, because the government just keeps talking about affordable housing. Everybody, both parties talking about affordable housing. One of the only things they can agree on is affordable housing. Should I say affordable housing again? How many times do you have to hear affordable housing before you get into affordable housing? You think they're going to create more tax incentives for affordable housing? I do. Well, they already are. Demographic shifts and labor market dynamics, slower immigration and potential government workforce reductions could also impact housing demand and construction labor supply. Deportation policies could severely reduce the construction workforce, leading to higher costs and accelerated adoption of technological solutions. Federal workforce reduction and relocations could also reduce or shift local market housing demands in Washington, D.C. and other areas of high government employee concentration. They're going to ask the government employees 75% reduction. That's going to have an impact. So you definitely, if you have real estate in these markets, there's going to be some opportunities. There's going to be a bit of a mix up there. You'll have to see what happens. The immigration, we have to see how that plays out, but that could impact. I think that will hit the commercial construction sites harder. It's going to drive up commercial prices, commercial multifamily, ground up, you know, 50 to 100 unit buildings. They're going to get smashed because with that much deportation and the ability to identify undocumented workers on a job site, on a commercial site, is a freaking 100 unit building. It's pretty big. It's pretty wide open. Many access points. That's going to make things a little uncomfortable. That's going to increase prices potentially. Now it's going to create more jobs for American workers. It's going to cut. I mean, it's going to cost more. That price is going to get passed on to the consumer. It's going to create more real estate housing inflation. They're going to try to drive up rents on the top end, which drives up rents on the bottom end. Prices are going to keep going up. You got the tariffs increasing the costs. You got the immigration increasing your labor costs. As a commercial player, you're getting smashed. You're getting smashed. You're getting power bombed by the government. The homelessness crisis. I'm not really going to comment too much on it, but there's a lot of legislation in California. Apparently, this is the only thing I will say. Um, Proposition A in Los Angeles County, which raises sales tax to fund 1 billion a year of homelessness programs. So they're already getting taxed for that, and they're going to maybe increase those. Are giant steps in significantly increasing the supply of interim housing in the U.S. State that accounts for 28% of the nation's homelessness. This is California. 28% of the nation's homelessness and 49% of unsheltered people. Is that accurate? I wanted to fact check that. That seemed a bit extreme. 49% of unsheltered people. So half of them? Is that in is that in America? Or is that just in the state? I want to just dive into that. That seemed extreme. But the government is thinking about doing things like building um, what they call a new vision for social housing in America. And they want to unlock government land to build housing in America. And this might be like government, this might be kind of like project style housing, but affordable housing. This is one of the government solutions to the affordable housing crisis. Will this happen? I don't know. Um, I kind of have some reservations about the strategy. I'm not sure if it's the best strategy. I think kind of this point is maybe a little better. Accessory dwelling units, ADUs or granny flats will become even more popular in 2025 for increasing housing density and affordability. I've been all about housing density. That's why I'm very into co-living, where you buy a single family property and you gut renovate it into multiple units, essentially mini units, basically private bed and bathrooms. So you take a 3 bed, 1 bed, turn it into a 3 bed, 3 bath. So a 3 bed, 1 bath into a 3 bed, 3 bath. And then you rent each bed bath for $800 a month and utilities included and cash flow, as long as you can do it within the housing regulations. That's not a bad play. That's not a bad play. That's like a co-living within the, no more than XYZ people not related by blood guidelines that are out there that exist. You pull your permits, you get your deal done well, and that can be a really solid play. And it creates affordable housing. You also have these ADUs or granny flats, um, which I've done a video on granny flats. I would recommend watching that. It's on the YouTube channel. Brian Loves Cash Flow on YouTube for the IG people. I would recommend tapping into that. But granny flats, building ADUs, basically, that strategy is targeting land where there's a house, but there's also some acreage, and knowing, speaking to your architect and knowing what you can build on that acreage. Can you build a separate plot on a separate plot. So you might be able to get a container shipped in, just lay out a concrete foundation and just drop another house on the side of your house. Get that property a separate tax ID, get it reparceled. Now it's a separate property that could be sold if you wanted to. Get a loan on it, rent it. You can do all these different things, rent to own it, um, all types of strategies. And some of these municipalities, you can build multiple ADUs on your property. So they'll just have, oh, you can build one ADU per 150, square feet of lot size or whatever it is. I have no idea what it is in each municipality because it's different depending on where you go. But it's something to look into, especially if you're investing in places like, North Carolina and some of these different areas that have a lot of rural land that come with the property. Because you may be missing an opportunity where you could build multiple properties on that land. There's a lot of auction properties that come with good amounts of land where the house itself sucks. But if you could build 5 ADUs and rent them, Section 8 them or something like that, like you might be able to put together a play. And a lot of people aren't thinking like that. You can build a lot of these ADUs for 50, 60,000. It's not a big cost. 50, 60,000. Depending on where you do it. So that's an interesting thing to look into. But density to me is the solution to the affordable housing crisis. It's not going and building on freaking farmland or whatever government land they have. It's not going and doing that necessarily. It's just developers waking up and building it because there are multiple strategies to build it that don't require extreme government intervention, tax credits, and all these different things. You just need to get knowledgeable about it and get into it. I guarantee you get into affordable housing, you're going to be able to produce thousands and thousands and thousands of dollars per month. You'll definitely be able to accumulate a portfolio that can produce over 10,000 a month. And if you get over 10, you can get over 100 if you just keep doing the same thing. If you can get over 10, you can get over 100. You can definitely get over 20. You can definitely get over 50. Because you just reinvest. If you had 20, the reason I know that is it's like if you had 10,000 a month in cash flow, that could stack up an extra 120,000 a year. You could buy a house cash every year, once a year. Each property you buy cash is going to put another 2,000 a month into the pot. It's going to accumulate faster. It's just simple mathematics. Life's investments, you got to ask that question again. How fast can you get commercial multifamily Section 8 deals done at 15K a deal? You got to re-ask that question. It's almost like two. I'm not sure what the question is. Technological innovation in housing construction, technological advancements such as 3D printing, robotics, automation, and sustainable construction will continue to revolutionize the housing industry in 2025. As these technologies continue advancing, they can dramatically reduce costs and shorten construction schedules while also improving energy efficiency and increasing the overall quality of housing. We'll see. We'll see. They always have a problem. The problem with these things is like the government has a problem with the new technology. So they bring out the new technology and they say, we could build the house with the robot, or we have these new interlocking blocks and we can just interlock the house in 2 days. And it's been tested. We believe it's strong. Like they don't really know, right? Because it hasn't been out for 100 years. It hasn't tested it hasn't tested the climate. We're already seeing the climate change. I got an article sent to me. It said this week, New York is colder than Alaska is right now. Like global warming and climate change. These new technologies haven't been tested by climate change. Maybe there's more storms here than there used to be. And because this shit was built out of those interlocking blocks, it just blows away. They didn't wind test them. So the government, the agencies, which are very local, they won't approve the new technology. So then, even though it exists and you see it being built in Europe or other areas, you can't bring that shit into an inner city major inner city and really do anything with it. You could do it rurally in certain areas and they wouldn't care. But that becomes a different monster. It becomes a different monster. So know about these things, but don't think you can necessarily apply them to a major city. That's you probably need about if you wanted to do that, you need like a 250,000. You need to hire a legal team and kind of like really try to argue your way through it with the city to get it approved. I think you would really have to go hard. Going with a 250,000, like we're gonna get this thing done. We're gonna be the first to do it. We want the first movers advantage. To find a deal, say 11 units, and make them Section 8, how long does it usually take to find a deal around that size for 15K? You mean 11 unit building for $15,000? I don't know that I've seen any. I don't know that I've seen any. I don't think you could you need more than 15K to play with for that level. Yeah, I'm still looking. You're gonna be looking for a long time. Um, Artificial intelligence in real estate. I mean, everybody kind of talks about that. Climate change and sustainable housing. I mean, AI is going to empower wholesalers and people who are um, leveraging applications and software and different things. It will help you with follow up systems. We're going to be doing some of that within the Boots on the Ground program. We're unrolling the um, direct to kitchen table acquisition strategy this week. So that's going on now. Um, so that should start yielding pure off market deals for Boots on the Ground members, which is amazing. And some aspects of that leverage artificial intelligence, AI technology. So you can use it to acquire deals. You can use it if you are starting with 15K and you want to get a deal done. You're going to have to go hunt a damn deal down. You're going to have to go create a deal. You're going to have to get into it, right? So that can definitely happen. Oh, you're talking boots on the ground. Yeah, we can get you a commercial. I actually I didn't see an 11 unit deal for boots on the ground, but I'm actually after this goes off, I'm looking at a 5 unit that popped up for like I think it was 200K. And it was like a 5 unit, very clean, looks very structurally sound, and the numbers look amazing. Better than I've seen on a lot of deals. It's in a great part of the city as well. This thing is a gold mine, especially if we go in it. I got to see the video, but if we go in it and are able to add some bedrooms and increase the net operating income of the property, the cap rate's like 7.5%, a nice 7.5 cap. I mean, that thing is going to rip. It's going to be an amazing deal. Yeah, we did tour 5 units. So we have done 5 units. We have done commercial deals. We've done many of them. There are a lot of them throughout the city. 5, some 6 units. Those are the ones that kind of fly under the radar and you can still get a deal on them. But yeah, we've worked on a couple. We're working on one right now. We're working on a 6 unit co-living deal. Um, yeah, we can do commercial, we can do the residential, you know. It's all kind of similar. Does Philly consider 5 unit commercial? Well, it's not Philly or it's not Philly versus anywhere else. That's kind of like the national acceptance is once you get out of 4 units, you're out of residential. Residential is 1 to 4. Once you're out of that, you're commercial. So once you go 5 is commercial, and then your building code is commercial. In some municipalities, 4 units gets you kind of like the commercial building code. Like there's no difference. So you need to learn that as a developer how the city treats it. Philly is kind of very close. So it's like if you got 4 units, you're pretty much there. You might as well get 5. But that's the AI aspect. Boots on the ground. Yeah, we could find you some commercial deals if that's what you're into. Commercial deals are fine. I just like the existing structure commercial deals if I'm gonna deal with them. Easy to value add. What else we got here? Seven types of homes. This is good. Yeah, we've been going for about 50. Seven types of homes expected to soar in value by the end of 2025. Okay, let's see what these are. Um, One, historic homes. I've seen a lot of this. Historic homes are definitely going for a lot. People are very interested in historic homes for whatever reason right now. Um, they're cranking through them. They will sell for a ton. People pay 150, $200,000 premium just because they have that historic look to them. The problem with them is if you try to change anything on the exterior of the property, and I mean any damn thing. Sometimes it could be like cutting this tree down. You don't really know. Definitely any of the exterior trim, the porch, the double door, all of these things would have to be approved by the historic department, preservation department. I have a famous $10,000 door story where I didn't know I was in a historic district and my guy ran in with a damn sledgehammer and just smashed the door out. It's a nice door too. He didn't like it. He smashed it out, and I got a ticket on the door for, hey, you got to remediate this and get a door. You're in a historic district. The only guys who built the door, well, guess how much they charge? $10,000. Nobody else builds them, so you just got to pay them. $10,000 door. You could get into a mentorship. You could get somebody to build a house for you for like 10K, and all I got for it was a door story. So I can tell you guys a door story, and it's just one lesson. It's an important lesson though. Somebody who remembers the door story, they won't lose that 10,000 or 15,000 or 20,000 or whatever it's going to be because at least they have that lesson. But historic homes can give you value. They can also give you headaches. Um, Multifamily units between high mortgage rates and rising housing prices, many would-be buyers are turning to alternative living options, including multifamily units. For those who have the means, these could be worth the investment as they continue to increase in value in many areas of the country. Especially multifamily housing, especially units close to city centers and transportation hubs, have seen high demand both from investors and home buyers, said Matt Morgan, a licensed real estate salesperson with IPA Commercial Real Estate. Rent growth in these areas continues to outpace inflation. This is what I've been saying. Rent growth in these areas continues to outpace inflation. That's what I've seen. I'm like, damn, this thing's going up faster than inflation. Who even cares that the housing prices are higher? The spreads are the same. And if you can get those spreads, you're going you can survive and win essentially. I expect values for multifamily properties in walkable, amenity rich neighborhoods to increase 10 to 15% annually over the next 5 years. 10 to 15% annually. But what he's saying, it's not only multifamily that's going to happen to. Those multifamily buildings are intermixed around major cities, and a lot of the real estate is going to go up 10 to 15% annually. The rental products, the markets are going to change around and continue to transform. Prices are going to continue to go up on the buy side, on the mom and pop side, because housing costs and construction costs are going up. Prices are going up. So if you can buy in now in cash flow and then get 10 to 15% appreciation on even if we take this as a single family rental, if you were getting 10 to 15% annually, which I've seen on a $220,000 house in 5 years, it's like 100K. It's like 100K in 5 years of appreciation that you could grab 80% of tax free. Then the rents are going to keep going up. That's kind of crazy. That's kind of crazy to me. Like that's a really nice spread and growth on your value. All by the way, you're getting tax losses while you're waiting for this 100K appreciation. You're writing down on your taxes because of ghost depreciation on the asset and you're cash flowing. That's kind of crazy. That's silly. But the analysts see it. This is why everybody's getting in. This is why the hedge funds are trying to get in because they see it. Sustainable and eco-friendly homes. See that a lot. People putting the solar panels on the roof. There's a lot of that activity. If you're in rural areas, I mean, you can give your house some flair by doing that. There are going to be different tax credits and different things there as well. And that's a style of building. If you're building that way commercially, if you put on like a green roof, you might get density credits where you can now add more units to the commercial building. You can get like a 50% density credit. So they're like, oh, you can build instead of 18 units, you can build 24. And you're like, damn, that was nice. That's more cash flow because I went green. So there's always incentives on single, multi, and commercial. Assisted living facilities. I've done videos on this. We talked about this, but according to Fannie Mae, around 44% of older homeowners ages 60 and up said they consider selling their homes at some point or said they've already had done so. For some, this simply means buying a new residential home or renting a place potentially near family. For others, it may mean moving into a senior or assisted living facility. If that happens, it could lead to some major growth in property values. As demand for care facilities surpasses supply, especially in highly desirable retirement destinations, values could rise 7 to 12% annually. And these things kick off an assisted living facility could kick off 15,000 a month. Just one property. One property could kick off $15,000 a month. So if it's also appreciating, and these houses tend to be a little bit more expensive, like I would say you'd be in Philly, you'd be all in on one of these, probably like 500,000 on a single, like a bigger one, maybe 600,000. So if it's appreciating 7 to 12%, that's a lot on a 600,000, $700,000 asset. Some of these are $1 million houses or assets because with an assisted living facility, you're turning it into like 10 beds, 10 baths. You're getting the group home variants. Um, you're doing a lot to that property. You're putting in a sprinkler system. You're really upgrading it at a different level, and then getting a assisted living facility valuation, which is separate. But that's a whole different ball game, guys. But that's kind of going up. First, furnished apartments and condos. Um, Not everyone wants the hassle of home maintenance and landscaping, which is where fully furnished apartments and condos come into play. Also comes into play on what is it midterm rentals. There's short term rentals, of course, you can furnish. There's also midterm rentals, traveling nurses, traveling workers in general, and you can go pre-furnished and make a profit. You can make a nice profit. Some of these midterm rentals, people are doing contract work. They're in town for 4 months. They're paying 2K a month in rent because their contract is basically covering it. And because there's not that many midterm rentals, you can make decent money. So never overlook that. I know we have one masterclass member. She's in Arizona and a traveling nurse herself. So she kind of got into that business out there and started renting out to traveling nurses. Nice cash flow. Homes with ADUs, we already talked about. Starter homes. Starter homes are becoming fewer and further in between, but with scarcity comes the potential for rising values. If you can get your hands on one, a starter home is one of the most valuable properties on the market right now. This is good for you flippers, right? If you can get your hands on one, a starter home is one of the most valuable properties on the market right now. While other larger types of homes will command higher prices, starter homes are so rare that they just keep going up in value, said Martin Orifice, real estate expert and CEO of Rent to Own Labs. So he's hitting that rent to own button. So he knows the demand out there because he's dealing with the people even who have, no cash, no credit, and want to, get a house. They aren't as profitable for builders, and large investors have bought up so many of them that they're basically impossible to find. That's true in a lot of areas. I dropped a video that showed um, 1/9 of Atlanta is owned by just like institutions that won't list the properties for sale. They own like one ninth of Atlanta. So, and they just only will rent these properties. So people who are looking for those cheaper starter homes to buy, they can't find them. So as a flipper, if you're a low end flipper, like if you're flipping, I can't really put value on it actually. I can't say it's not a value because you could do $1 million flip. It's kind of a style of flipping where it's like you're trying to sell to the average of the market. Like some people try to flip. I was showing my wife this flip deal the other day where the person went super hard. I knew they used an interior designer because the style was odd. It was like gold handles and all this stuff, and they just can't sell the property. And I'm like, I could have told them that. You just want to go with a nice modern look, make it clean, make it simple, and keep your cost at a reasonable cost so that you have a wide enough spread to offer somebody a good price where they can get equity and value. If you can do that, you can flip in this market because this is the pain. The market pain is um starter homes are so rare that they just keep going up in value and they're impossible to find. That's the market pain. They keep going up in value and they're impossible to find. That's what the market is experiencing right now. So if you can create a product where they can get a reasonable price and a reasonable product, boom, that's where everybody can win. So that's the interesting part about this market is people are always looking for these starter homes, and I don't blame them. I mean, you buy some of these starter homes right now for 310, they'll be worth 450 in like 7 years in Philly. That's where the market's going. It's not going down. It's not really a reason for it. So very interesting. That is kind of that, ladies and gents. We covered a lot tonight. Um, it looks like we are good on questions as well. So I hope you guys got value out of that. If you're interested in any of the programs we have, we have the Boots on the Ground program where we find finance, rehab, tenant manage for you. We have the real estate ride along. The next real estate ride along tour is January 11th, Saturday, January 11th, the New Year's real estate ride along tour. Action packed. We're building more than ever. If you want to get tickets to that, just DM me, ride along, or drop a comment that says ride along. And then we have the Inner Circle program. If you want to tap in with the team, learn how to invest out of state like a pro, and just get started. Get your, took us off the sideline, get into the game, try to stack a win, try to hit 2025 with a head full of steam because if you miss 2025, you're just missing a window. I know this is a magical market. We just talked about why it's a magical market. Haynes said, Mike Morgan said, so much good about your program. I will be tapping in. Tap in, right? Like definitely tap in. You know, it's you got to get a piece of this thing. And somebody like Mike Morgan, like he's tapped into the program and he's doing phenomenally well. Phenomenally well. His portfolio, phenomenally well. Very tapped in, very locked in. 2025 is it's a window. It's a window. It's not gonna these windows, the one thing I've seen is they just don't stay open forever. You don't know why. You don't know how long it's open. You just kind of run when it is. Right now, there's a window. 2025 is in your favor. The statistics, the data, it's in your favor. You got to get your mindset in your favor and then, go make it happen. Boots on the ground can help you to accelerate if you need time, if you're busy, which a lot of people I've found, have more money than they have time. Got some capital and they're just like fucking busy, man. I need some leverage. And That's intelligence when you're as an investor to seek out leverage. I do it, like it's smart. Um, but you can still do it like through the inner circle, just tapping in. You can definitely invest out of state. You can invest where your money goes further. You can build cash flow. You can do it as long as you have the mindset, but being tapped in not only to me and my resources, but also like other people who are doing it, who are sharing information, that helps you pretty big time, especially from what I've seen. Um, it definitely helps you to get to the next level faster. And I'm not the limit for any of you guys. Once again, I mean, you could take any of this information, go do 1,000 deals. I'm not a limit in any sense of the imagination, nor do I want to be for anyone. This is, it's your ball to run with. You'll scale as big as you can think. This is giving you a blueprint, essentially a framework that is a web. Essentially, it's showing you how to cast a real estate web, where you can create an interlocked network to find your deals, get them financed, get them rehabbed, tenant them, and try to monetize them, and hang on to them and let them appreciate, and write them off on your taxes, and get some cash flow. And that's basically what that is. It's teaching you guys that aspect. If you want to learn, you learn. If you learn it and you apply it, you'll get results. I've seen all types of people get results. I've seen people who didn't think they could get into real estate, didn't really believe in themselves enough, um, coming from outside of the country and tapping in. I've seen all types of people just make it happen. It's usually a mindset shift more than anything. There's a lot of real estate therapy going on, but it works. It gets you to the next level. It gets you to the next level. So that is that, guys. If you need me, you know how to get a hold of me. We may do a session on Wednesday about how to buy a house with a credit card, because people keep asking me that question. I feel like it's on people's mind for some for some reason. I don't know why, but we may talk about that on a quick Instagram only live, or maybe I'll make that like a Zoom, like a private call, because there's been a lot of demand for that. If anybody's interested in that, DM cash flow. We'll shoot you a link. But we'll do that probably on Wednesday. So stay tuned for that. And stay locked in. 2025 is right here. We're like less than 30 days. So as soon as that clock strikes January 1st, we're back. If your goal is to do 10 deals, it's time to do 10. If it's 20, it's time to do 20. If it's one, it's time to get that first one. If you can start off Q1 and at least get a deal under your belt, you're in great shape. You're in great shape. But it's never too late to start. Appreciate you guys. I'm going to tap out. I'll see